Welcome to Sunday Investing, and this is our 35th episode of the Know Your Promoter series. And today we have Mr. Kunal Kishore, the Chairman and Managing Director of Value 360 Communications. How are you, sir?
I'm good, Tanmay. How are you?
All well, sir, and congratulations, or I would say, it was a very brave decision, opening the IPO in such kind of a market conditions. We all know the markets have surely improved, but the primary markets are yet to pick up. So, what is your, just very recent journey, and what were your interactions with the investors?
Sure, Tanmay. Thank you. One thing that is there throughout in my journey is that whenever we've started few something, the market was not very right for that moment. Just the inception of the company happened in 2007 and 2008. In the world saw the biggest economic slowdown. We had Lehman Brothers failure in 2008. So imagine 1 year into your journey of business and you face the biggest economic slowdown. And then you transition to actually start to see that markets are there to actually impact businesses. But if you have your foundational understanding clear about the business, you will be able to sail through unscratched. So I'm very confident that today, again, the journey of the market when we are actually entering is not very favorable for IPOs. But I'm confident that, like in many times, we have actually passed through many of these moments of slowdown and market volatility very, very effectively. And we are going to actually have, and very confident that we are going to actually help all the investors who are going to be on board with us to see a right value coming in for their money invested.
So before going into the business model, can you help us with your background and what idea came in कि मुझे इस तरह का business बनाना है and what was the idea behind Value 360?
So my journey started when I was 22-year-old, and I had just started to work in PR industry. And very early on, I realized that in this business, I wanted to do something on my own. So fresh out of college, 8 months into working, I started my first venture. It was called Precision PR. That was in 2003. And we built it into a formidable business, doing a lot of work in the lifestyle PR, where we were working with lifestyle brands. 2007 is when I decided to actually work and build our focus towards more on a corporate side of business. And that's when Value 360 started on, where I joined hands with Gaurav and Manisha to get this company started. The journey at that point of time, my focus was clear that we would be focusing on multiple sectors. We would want to actually scale, be a sizable business. And while PR at that point of time was not very well understood subject, and it was even difficult to help even my father understand what PR is. Forget anybody else. We started from that time, and now today PR is one of the most critical business function for any business, large or small, because PR is one of the very important marketing tool or a marketing services which a marketing department of a company requires to actually manage different stakeholders and also manage how a brand and an organization or a company or a corporate or even a government is perceived. Not only them, even individual personalities, they require consulting, right from a politician to a celebrity to a star to even your CM of a state.
Got it. You can just take us through your business model because I was seeing there are kind of two different platforms we are running. One is our Value 360 platform, second is our Popcorn PR. So just take us through what are these two different verticals.
So, just to begin with, actually, we started our journey with Value 360. Value 360 is largely a public relation firm Public relation organization, they are a service consulting business in consulting of how you work in terms of engaging your different stakeholders through mass media. And when we say mass media, it is largely initially started off with traditional media like newspaper and magazines and television channels. And now it has actually expanded into social media platforms, influencers, and other such segments. So today, if I may explain what is our business model, we work with corporates, we work with companies, we work with governments, where we help them in terms of managing their entire communication of their company uh, through media engagement. And when we say media engagement, it's slightly different from advertising. In advertising, you are selling a product, you are selling a service, but in PR, you are selling your image. You're not selling your image, you're creating your image. You're creating how a new product that is getting launched, how that product is seen in the market. Is that product accepted in the market or not? That's where the perception game comes. And it is a very nuanced um, service where you actually with every passing year, the company matures and start to understand this business differently. And today, where we are, we enjoy a very high degree of respectability in the market. We are managing some of the leading corporate brands in the country across sector. That goes on to reflect how we are placed when it comes to our capability and our credentials. So that's on the PR side of things. Here in PR, we generally are signed up for an annual contract or a 2-year contract or a 3-year contract, where we get the contract as on a fixed retainer fee, which is divided in a monthly retainer fee. So you generally get a tender value of a 1 crore or a 2 crore annually, which is then paid out on a monthly basis against the service that we provide. And largely our expenses are on our resources, which are employee cost, where they are enabling our access to media servicing and creating content for the businesses. So that's our business model. What is good about this business model is that there is a predictability of what you can achieve in a year. So when I say predictability, you have today I know what is my run rate going forward. So the predictability comes from the fact that you have a locked in revenue. What it also does is that you know that from here how much you can scale, because there is also some bit of growth cyclically that we get, which is during the festival time, when we see a spike in terms of media brands spending more to target their consumer during the festivity time, like Diwali or Durga Puja, or across regions. There are different festivities around which the spends goes up. So beyond the fixed retainer fee, you actually also have possibility to earn more from these festival cycles. Then we have popcorn. Popcorn is into business of creating creative content solutions and also managing social media. So today, if you're a brand and you want to actually do a creative campaign on digital, or even doing some retail branding, or even creating a brand identity from scratch, or managing a social media page where you need to actually engage on an ongoing basis with your end consumer. All of that is largely part of popcorn delivery, where we actually look after the creative content requirement and also digital management of digital presence for the brand. So that's, and both of these businesses are complementing to each other. They are able to cross refer clients. So it allows us to actually benefit from each other at many times. And we have seen that value has got business through popcorn, and popcorn has got business through value. So it's like almost like a flywheel effect for us. And third entity in which we have a strategic investment, where we intend to actually increase our shareholding post IPO, is Clan Connect. Clan Connect is an influencer marketplace. It's AI enabled tech platform which allows brand to work with influencers, and we it is almost like a marketplace where we have more than 80,000 influencers from across the country, right from million plus influencer follower base to even a small influencer sitting out of a small regional town who have a follower base of 5,000. It allows me to actually give brand a solution where they are looking to actually reach out to end consumer through influencers and content creators. So these are three areas of businesses that we are in. And with this, what it does is that we are able to actually give a very end-to-end solution to the companies. So that's about the organization, three organization. I'll just touch upon because any service business, their biggest asset is the client and their resources. So I will just touch upon the credentials or the kind of clients that we actually manage. So today in the automobile space, we manage Tata Motors, we manage Kia Motors, we manage Audi India, we manage Toyota Motors. We also handle the corporate mandate for Skoda Group. So we within the automobile space, we have a sizable chunk of clients that we are actually servicing in a similar way. We are working with FedEx, which is India's global logistic leader. We are working with Pernod India, which is second largest alcohol brand. We are working with state government of Uttar Pradesh, where we are managing the Department of Information and Public Relation. We are also working with DigiYatra, which is one of the government initiative of bringing in technology for seamless travel. So these are the kind of clients that we represent, and all of this can actually give you an understanding that some of the biggest brand they trust in our capability to manage how these brands are effectively seen in the market, how their company is written about, how their product launches is treated. All of that is part of our services.
Okay. So can you give us the revenue breakdown between two different parts? First would be the PR vertical and the digital brands and content solutions, and the second would be government players and the private players. So revenue breakup between these both.
Okay, so the first question is that between the PR and the digital in our journey, we started very recently, which is in the year of 22-23. So it is right now contributing to upwards of 14% in the total revenue structure. And government, we've just started, but still the government sector is going to actually contribute a lot, because if you look at just the government sector allows you to have opportunities to work with different departments within the government. So it's you're working with Department of Information PR, then you're working with Ministry of Civil Aviation, then you might get an opportunity to work with education department, or even department which is into management of, like, you have other departments like Niti Aayog. So that is the opportunity that you have within the government sector. We are very bullish in terms of our focus on the government sector, and we do see that that is going to be one of the sectors which is going to also contribute big in the coming years.
And on the government versus private players.
On the government versus private player, like I said, that it is just this year that we actually started
Mhm.
late in the, that we've started our business in the government side. So currently, I do not have the percentage breakup, because largely
Okay.
just last 3 months is where our revenue will start to show from a government side.
So we can expect FY 27 to have a decent chunk from the government part.
Yes, yes, that is one of the big sector that is going to have a good contribution into what we are actually projecting ourselves in the coming time. And we've got some good leaders. We've got senior people to build the government sector who have very, very strong and credible experience of working with government sector, and the result is already been seen. And we are only actually increasing our effort there.
Got it. Sir, how does a contract with a brand work with Value 360? I believe this should be more or less on the timeline part, whether it would be an annual or 2 year, or is there any kind of a performance-based contracts also do we have with the brands?
In PR, there is no performance-based contract. Largely, it's a service contract. How you actually work with any consulting firm where they are paying you for your man hours. So once we have signed up for retainer, they are paying us for the man hour that we are billing in. And mostly, like I said, our contract is annually, and big corporates generally do a 2 year or a 3 year contract because they do not like to actually change their partners so frequently. So we've seen some of our clients stayed with us for 10 years. And that is the kind of consistency of services that we are able to deliver to our clients.
Got it. So, talking coming on your numbers, like from FY23 to FY25, revenue has been more or less flat between that 50 to 55 crore mark, about a 2% ish revenue CAGR. So, what is the reason behind that top line staying flat for this 2 financial years?
Okay, so while the or the RHP will show you last 5 years journey or a 4 year journey, but just if you actually go back in the year 21 and 22 and 23 financial year, you will actually see that we have actually almost doubled our revenue from where we started, from a 20 crore to becoming a 42 crore. At that point of time, our focus was to scale. And those numbers should be, you should look at my books and put those numbers on screen. But when we were scaling, what we started to realize is that scaling meaninglessly does not make any sense. So we started to focus on the fact that we would want to actually be a business which has a right margin, which has a good bottom line, and which is business in real sense. So we in with a very strategic thinking, we actually started to focus on how do we actually improve our bottom line and margins and PATs. So we started to do bottom slicing. And if you know bottom slicing, what it is that when you actually start to grow in your journey, you try and actually leave some of the clients who are low paying and low margin clients so that you can make a place for a client which is a high value and a high margin client. So in purpose, we actually looked at actually staying maybe at a similar growth level. But just if you go beyond just the top line, and as you start to figure out how the bottom line looks, it's almost like a hockey stick growth that we have actually mapped. And that has come because we have actually in last 3 years focused on thinking on how we want to see our business going forward. We do not want to just work. We want to do good work. We want to work with good brands, and that was the focus in last 3 years, and that is reflective. So if you look at our client portfolio 3 years back and now in last 3 years, even the client credentials would be like a hockey stick growth. Today, best of the global brands when they are entering India market, if they're calling 3 agencies in the room to evaluate who could work with them in PR, we are one of them. So we know that in last 2.5, 3 years, we've been able to actually establish the foundation from where we would want to actually do a multiplier growth from here. So that is the idea that we have worked on in many ways. It was a foundational structure that we were building so that from here we can actually start to scale, and our March numbers will be reflective on that trend, as well as we will release those numbers in the coming month.
If I want to summarize, these are two factors behind that top line would be first would be the consolidation, second would be focusing more on the high quality clients and the revenues and
Correct.
taking or cutting off the low margin kind of a business eventually.
Correct.
And
Correct.
FY26 should see growth because I'm seeing your first 9 months numbers are pretty strong. First 10 months I
Yes.
would say has already
Yes.
matched your FY20. So that is going to be an incremental growth.
Yeah.
I was also
Yes.
coming on the profitability. Like our margins have significantly expanded, and PAT has proved very on a very really autistic kind of a pattern. So two parts here. First is what factors drove those margins to that kind of a level? And second is, are these margins sustainable going forward?
Yeah. So I'll explain in a business, yeah, which is a business of service of professionals. Um, and that is how you actually your journey goes through. So if you look at a lawyer who's a legal consultant, PR people are mostly, if we say media and digital consultant in terms of consulting how you need to engage with the media. In similar way, a lawyer helps you to navigate your legal problems. Now, when a lawyer start his journey, his cost is very different, and as he becomes an experienced lawyer, he's able to charge premium on his fee. And once he has a clientele and a credentials, the premium becomes much higher, and that makes the margin becomes better. And such is the case with businesses like us. We have in 18 years have built a reputation, very strong reputation for our brand today, with just the names that you could see on our roster. Today, we have moved in that journey where our profitability is going to even become better. And a good benchmark would be our leader in the industry at Factor, where they have a very good percentage of EBITDA and PAT. And if you look at their numbers, which is available in a public domain, you will understand that those are the margins that are achievable in our industry as you go through your journey. And that should be a reflective direction that any investor could see that how what is the scope and what is the potential for growth in the PR industry.
So, as you talked on ad factors, I believe they are a very large player on this primary market based IR also. So, are we by
Yes.
any chance looking at that segment also, at least on the exploratory part?
Yes. So I'll touch upon in terms of sectors that we feel are going to be our key focus sectors, yeah, post IPO. When we actually start to focus on few of those sectors, we've already started to focus on by bringing in leaders who can drive those sectors growth. So IR and IPO and financial PR is one of those sectors where we are going to very, very strongly focus on. We're going to acquire right set of talent and people who are going to actually build that particular sector. We've already hired a leader for that segment last year to lead that practice. Second is the healthcare, which is one of the sector that is right now contributing minimal to our revenues contribution. But healthcare is one sector which is where you cannot do anything but PR. You cannot market yourself as the policy does not allow you to market yourself. PR is the only tool through which they can reach out to their different stakeholders, whether it's consumer or their trade partners. So we do strongly believe that healthcare is now going to be, and healthcare is also a sector which is very, very recession proof. So that is a segment that we have already hired a very, very senior leader to actually lead that practice, and we've started to see a result coming in from there as well. Government practice, I have already spoken about. Government practice allows you to actually work across a segment and across department of the government. And that sector also, I see a very, very strong potential and growth in that sector. And one more critical sector is the end consumer, direct to consumer sector, where we are seeing D2C market growing. A lot of D2C brands are coming in. Also, there are several consumer brands which are now largely looking at engaging with the consumer through digital influencer and other segments. So that is one other sector that we feel is going to actually contribute to the new growth structure. So all these sectors that we have spoken about are the new sectors which will be added on post IPO, and which is where we've already established and started. We had started doing our work on getting right set of people to actually lead those practices in last 6 months. And now we have started to see the results. We did not wanted to wait for IPO to do this, because it is critical for us to actually start showing results in the first year itself, for the investors to understand what is the potential that lies with us. So today we are at a place where we are only going to actually, from this foundation, build it further.
Got it. So we are raising approx 42 odd crores from the IPO proceeds. So can you give us the breakup of the usage of those proceeds?
So our use of proceed is divided among between working capital, our capital expenditure, prepayment or repayment of some of our debts, and also investment in Plan Connect and general corporate purposes. So we are going to actually utilize 12.7 crore in our working capital requirement. We're going to actually invest in our capital expenses 4.65 crore. We'll close our debt of 4.5 crores. And we are also going to invest 7 crores in AI-enabled influencer marketplace Clan Connect. That will allow us to actually be future ready for companies which are looking to actually invest heavily on influencers. And the reason we are future ready is because we are going in the direction of managing this business of influencer marketing through a tech platform which is AI enabled, and that is the future that we are looking at.
So before leaving, what kind of a message you would like to leave for our potential shareholders?
Um, Largely, I do not want to actually give out numbers as I'm not allowed to, but I what I can tell you here that we're a business which is a mature business, which has a very high respectability in the industry. I lead the industry as a president of PR association. So I'm taking this journey as a responsibility towards the industry where the how investors are going to see our industry is will be defined how we are going to perform in the market. So what we are building is something which is sound foundationally very strong. We have very strong credentials in the market, very strong presence in the market. And today, while we might not be the largest in terms of revenue, but we're competing with we're competing with most of these largest firms, and we are also, and in many ways, and in many times, winning against some of the largest companies. Because if you're actually in the market working on brands like Samsung, Tata, Toyota, AB InBev, Budweiser, Omega. You have to beat the best in the market to actually get them on board. So what you should also be aware is that in when you are actually investing, you should actually look at in a sector how that organization is placed. Like many players, you might be one of the many players in the market, but we are not one of the many players. We are one among the top. If I'm not wrong, top 6 to 7 companies in terms of just the revenue, and in the top three Indian PR firms in terms of revenue. And as we see today, this is an opportune time for any investors to come on board, because from here we do see an opportunity of actually investing in the right segments, sectors, and diversifying our business to actually do provide a good scale to the current top line and have a very healthy bottom line in coming time. So I do want to leave you guys with a last message that your money invested will be worthwhile. And especially I'm talking to people who are looking for a long-term investment as well as short, that we are going to be one of your best bet when it comes to your investment. We're going to work really hard.
And
I can't
also
say
add also I had
I
seen
can't.
some very interesting pre-IPO names also. I seen Mr.
Yeah,
Rohit Sharma investing. Oh,
yeah,
yep. And also you are one of the few companies to whom which I knew before the IPO, because you are the IR partner to Monolithic India, which is like one of our portfolio companies since the IPO times. So
yeah.
all the best. Wishing you all the all the luck for your upcoming IPO.
Yes, yes. Thank you, thank you.